Morning, Steve in Chicago with the morning grain call. Well, grain prices are a little easier overnight, very low volume. It doesn't really feel like there's a lot of news out that's going to push the markets higher. And so the path of least resistance is just inching a little bit lower or consolidating and moving mostly sideways in a low volume trade. As far as the China and U.S. trade deal is concerned, there was some talk out of Washington that they are getting closer. There's even some comments that a deal might be announced as soon as this week after the Mueller report is released, kind of offsetting some of the potential negative news of the Mueller report. The Chinese are willing to come in and buy U.S. ag goods. The problem is that there are a few people in the negotiating team that want more concessions out of China than what the current deal suggests. So we'll just kind of have to watch that pretty closely. We still feel that if there's a deal, we could see grain prices rally, maybe not as much as they would if it was done last November and the Chinese were buying up to this point. But we are going to be watching pretty closely that impact on prices. This week, China was a buyer of beans, but they bought mostly from Argentina, which offered some resistance to our markets. The weekly export inspections, the wheat running 5% behind a year ago. USDA is currently forecasting a 5% increase. Corn is 14% ahead. Last week it was 16% ahead, and the U.S. is calling for a 6% drop in exports. Beans are 28% behind. USDA is forecasting a 12% decline. So again, our export demand is beginning to slow down, which is offering resistance to prices. As far as crop ratings go, winter wheat is still rated 60% good to excellent, and that is at a 7-year high. Last year was at 31. Corn planting is only 3% done versus a 5% average. Spring wheat is 2% planted versus 13 average. And it looks like we've got conflicting forecasts as far as U.S. Midwest weather forecast is concerned over the next 2 to 3 weeks. One has some rains this week and then clearing and drier conditions. The other one has another front coming in later in the month of April. And that's pretty important. It is interesting that our weather consultant basically is looking for a slow regression into a more drier pattern, but he's also saying that once this pattern changes, it could remain drier this summer and warmer than normal for much of the Midwest. So we'll have to kind of watch that. Currently, there is no weather premium in the marketplace if there's a dry, warm summer this year in the U.S. As far as any other news is concerned, Shanghai stock market was up to 2019 highs as more of their data shows a bottoming in their market. And we also noted that the Chinese government is encouraging hog producers and breeding farms to test for the African swine fever to help encourage early detection. So even though markets are not moving very much, there is a lot of potential news out there that could begin to move the market. So we'll have to watch that pretty closely. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.